Hello accounts people, time to do a practice paper, a very good one from one of the three main publishers, although there are a growing number of smaller companies like Accountex all providing good support and good practice papers. So we're not doing the AAT one simply because I don't like students watching them on YouTube before they have a go at them. It doesn't do any good, it minimises the learning value of what should be sacrosanct. However, if you've got all three practice papers, or sort of publishers' practice papers, that's about 12 or 13, they all do extra ones because of the cash flow, and of course they can't in one consolidated question cover all the variations of unrealised profit, so we'll work on that one. Going to record it as separate small videos, so I can do a bit of extra work when we come to the consolidated. However, first of all, so task 1 and task 2 between them are marked, and the marks will vary between task 1 and task 2. Cash flow has already been recorded separately, so there's no point in me doing that. It's already a practice paper one that's on YouTube. However, I haven't done one of these. So cash flow is the less common, especially on first sitting, more common on a second sitting. However, don't gamble. I know a few students who've had resits because they gambled. This is a good chance of getting really good marks in a paper. It's got a better pass rate than most of the level 4 exams. You should be aiming for 80 plus. General rule is if you can get 80% plus on this, you've got a chance of going through without a resit. So have a look at the question first. So share capital, yes, we know what that is. Incidentally, unusually, sometimes it's got a revaluation surplus. That means something has already been revalued. That's part of equity. That means you could be tested that if something is being impaired, you reduce the revaluation surplus for that item first. Just increase the size a little bit. Trade and other payables, yet land and building value costs with accumulated depreciation. That means we know I've already practiced this question, we're going to get some depreciation calculations. They don't occur in every paper, but you should be able to cope with that if you've passed level 3 FAPS. Trade and other receivables, there's already an accrual in there. There's a bank loan repayable 9. Didn't actually give a date on 9, but we are in 1. So that bank loan is presumably a bullet payable loan in 9 years' time, 8-9 years' time. Cash and cash equivalents, as you'd expect, on the debit side, of course, so it's a balance. Retained earnings, part of the equity. Interest paid, sales, pretty routine stuff, costs, and opening inventory. Closing inventory will be a note, gives lots, and dividends paid. If it was a cash flow, that is last year's dividends, of course. So let's have a look. Inventories at the close, lots of notes, all careful reading. You can have these up on practice, on screen. Obviously you may need to minimise them. Not many training centres have got 2 screens for people to take exams up. Would be really useful with information like this. So inventories, that's closing inventory, and we've got the cost, and then we've got this is for the depreciation calculations. Land isn't depreciated, so 30 million of the land and buildings, 40 million is land, so we're only going to depreciate the buildings, the 10 million. However, we're also going to revalue 5 million. That's the main difference between comprehensive income and the standard income statement. And we've got the calculations, and then we're going to apportion depreciation, quite common. We've got an irrecoverable debt to be written off, and we've got an accrual on distribution costs and corporation tax charge, and then we're going to continue the operations. So okay, so let's get going on the questions. Right, revenue. So let's have a look. We're going to be going up and down like there's no tomorrow because I haven't got the information in a separate window. It's a bit annoying on screen. At the moment, sales are 83,926. There's nothing in the notes to change that number, so we can type our first numbers in. However, we know we're always going to be working on cost of sales. So cost of sales, we'll have a workings out box, pretty much guaranteed to start off with opening inventory. That's the one that was in the trial balance, of course. We know that one, 7986. And then we've got our purchases. Straight off the trial balance, there's nothing to affect purchases, no returns, no nothing, just going back straight off the trial balance, straight off the trial balance. And our closing inventory is in our information, our bullet points. As we'd expect. And put the drop down box in. That's the top one. But we've got to do our depreciation calculations. Now, depreciation calculations are on this paper in a box. We've got distributions, we've got everything to do, but we haven't actually got anything on depreciation calculations. So we'll bit of paper somewhere, maybe we'll get a box in the exam, who knows. Well, what we do know is we've got 10, just checking that's still on screen, still visible. That is the buildings, because we've taken off the 30 million, remember these are in thousands, and that we're going to times by 2%. Hitting the key, and then we've also got plant and equipment, which we're going to take off the trial balance. We've got 9,000, and that is according to the note. Just double check. 25% diminishing balance, which is why actually we took off the accumulated depreciation. Should have mentioned that before. So that's 25%. The revaluation part is land anyway, but if it was a building, we wouldn't be adding that to the depreciation because the revaluation's an end of year item, so it hasn't been there for the full year. So once we've got that, we can do our sums. Add up our depreciation, and then we just need to split it between the various parts. So cost of sales, okay, always back to the notes just to be sure, 50%. 5 or 50% would do nicely, and then the other two are both 25%. Might as well do the workings out now. So, oh no, actually distribution cost, no, it's actually 20%, didn't read it right. So the distribution cost was 20. And then that was the admin. Might as well do the whole calculations whilst we're at it. won't be long before we need it. Right, so that's the figure that we were interested first though, because we were on our so that was 1225. Cost of sales then, all marks, 55249. We'll need a minus symbol, so we've got our gross profit. That didn't work very well. Hello. What's it doing? In fact, it's not times. Third time lucky, or fourth time lucky, or whatever it was, I lost count. There's our gross profit figure. Not quite sure what my computer was doing there. Blame Microsoft. Then we've got our distribution costs. So we've got the trial balance item, workings out box, which is down here actually, but not in the right order. So the distribution cost of the trial balance was 100847. Then we've got the accrual, which is from the note here about distribution cost 32,000. Again, it's just picking up the information, practice, picking up the information, and then we've got our depreciation, which was we've already worked out up here, 20%. 10847. There's only those, there's no minuses. I'll put an extra row in for some reason. 11369. So showing that as a minus on this version. Then we've got our admin expenses. Where's our admin expenses box? Let's have a look. Offered trial balance figure to start off with, without going back up, going up and down enough as it is, and we will be taking off that from the notes the irrecoverable debt 25. Now in the exam, of course, you'll have the little green ticks. You better go through every note, every bullet point, make sure everything's included. And then our depreciation, again, I think I put an extra line in. Depreciation was the 735 we've worked out. Add them up then. 13721. Oops, what on earth happened there? So see if we can subtotal properly this time. Of course, in the exam it will probably subtotal for you. So 837. Alright, time to go back. Just double check. We haven't done the revaluation. We've used the closing inventory. We've done our depreciation, we've apportioned it, we've written off the bad debt, we've done the accrual. I haven't got to that yet. There's two items to go in. Profit. And we've filled in our workings boxes, not put off by those. Right, and so what we've got to do is our finance costs. No adjustment on this one, but obviously on a different day there might be. That's the 400 straight off the trial balance, interest paid. Profit before tax then comes down to 3187. Tax bill for the year, any adjustments required. Straight off the notes is not in the year because the expense for the year is 652. Any adjustment for overpayment, underpayment is not in the profit or loss account. That's the IAS, of course, revenue that you have to learn. And then the other comprehensive income is the revaluation. And we've done our profit and loss account. There we are, a few marks earned and everything covered. So we've got a change in equity, which we can now do. We've got the numbers, we've got the opening balances. There was no share premium. If there is a share premium, who knows, might not be in there. Might be there. Main thing is change in equity, total comprehensive income. So we've got the 5,000 going into the revaluation surplus and split it and then the total equity. So we've used the 2535 number, the profit from continuing operations, and we've put the comprehensive income in because we're showing that for our shareholders. And then the dividends paid is coming out of their money, it's coming out of the retained earnings. Don't think this one's the hardest. There's no issue of share capital in this one. They should just nicely add up. Right, so 10,000, there we are, nice easy one. I suppose if you wanted something more awkward, you'd have a bonus issue, which of course doesn't affect cash, more like see that in a cash flow question, and therefore you'd see something coming in the share capital. I think that's why I put this in, even though it isn't on their answer sheet. But that's fairly easy to add in, so it doesn't normally cause a problem. Right, onwards. Same information, same depreciation. We're now on our financial position in task 2. More marks on this. So the mark allocation, Osborne don't give us a mark allocation on this one. Slightly harder in terms of retained earnings and a few other calculations. So we're going to have to do some calculations right at the start. We've only got the one row. We're not listing the land and buildings separately, which means we're going to have to do a little bit of workings out here. So our workings out box, we've actually done some of these calculations already on the previous sheet. We've got land and buildings value and accumulated depreciation, land and buildings. So these workings out boxes are very important when things are going wrong, because the examiner needs to see where you're going wrong and only deduct marks for your mistakes, if you've made any. But they're also useful for coming back to if everything doesn't add up, because of course this is going to balance. So whereas the profit or loss, profit and loss account, you don't know if you've got the bottom figure wrong. This one balances. Now accumulated depreciation, now if you remember, it was only the depreciation on the buildings. Right, up into the information. We had accumulated depreciation of 1200, and we did the calculation earlier. We added another 200 to that. So that's whizzing all over the place on this one. So that's the 1200 to balance and the 200. for the year. And then, because we're on land and buildings first, doesn't actually matter if you didn't quite get it in this order. Of course, they've gone up by a few thousand, well, 5 million because it's in thousands. Then we've got our plant and equipment cost, straight off the trial balance. And then we need to put in our accumulated depreciation. Again, it's gone out in that order. And we've got our trial balance figure. And we've got the 250 that we worked out. And I left my notes there. That's the 250, and the trial balance. So that will be minus 9250. Add it all up. 50350. We've got our first numbers in, and a few marks earned. Right, that started. So current assets, pretty much what you'd expect, preferably in the right order. Should really know this by level 4 to put it in the right order. Inventories, of course it's reverse order of liquidity. Inventories have to be sold, then you've got to get the money in. This one's not too hard because just remember 6304 is the note version, not the opening version, and the cash is also off there. However, if you remember in the trade and other receivables, there are some workings out to do. We've got an irrecoverable debts in the notes. Nothing else to it, it's just literally just those ones. So the trial balance was, again, easy to miss these things out, just practice. When you first started this you may have got confused because of course it says 25,000 in text, and of course these boxes are all whole ones. So 13616. We're getting our second marks in, and that will be subtotaled 25022, and then our total assets 75372. So, why waste time? Share capital. Straight off the trial balance, so don't need to worry about that too much. Not really even going back up to that one, that was in the information. And we've now got a revaluation surplus that has gone up. That's the original figure plus the 5 million revaluation, end of year stuff. And our retained earnings will require a little bit of income, but actually we've already worked that one out, so you may get a box for it, but actually at the bottom of task 1 we've already done it, so I'm not going to bother filling that one in. Retained earnings 4175. It was, if you wanted to fill the box, it was the opening plus the income from ordinary activities minus the dividends, the 4175. Hang on, what have I done? Equity, share capital. Now that means we have taken out the dividend figure on a different layout, a different accountant might want to show the dividends, although the dividends as they are last year's don't really belong in statement of financial position. Some people still like it. That one's a nice easy one. It was a bullet loan, not repayable. On a different day, on a different question, the bank loan might be recalculated by some repayments and some interest. It's just repayable at the end of the year, and the finance costs have gone in there, but the finance costs haven't increased the bank loans because we've been paying it. That would be subtotaled. The only other thing you'll like to see there, debenture, or there might be director's loan or something on a different day, and we're nearly there. Current liabilities, we'll start off with trade and other payables, and then we owe HMRC some money. That one straight off the trial balance, there's no adjustments. I'm just trying to think, just double check, did we see? Oh no, we have. Actually, no, we have got to do some workings out on it. Nearly got caught out. Hang on, what have I done here? Did you spot that I put it in the wrong box? You did well. I'm not going to bother re-recording it though because of that minor mistake. Trading other payables, so the 100456, and then of course we've got some accruals. So accruals hide within trading other payables, prepayments within there, that's the trial balance version. And then we've also got an end of year adjustment, which again I can imagine that one being easily forgotten. So that was the 32, going back to the notes here about the distribution costs. So that now gives us our figure for our trade and other payables. Quite easy to miss, and the tax liability in this case is just a trial balance figure. On a different day it might have to be adjusted, well, it's more likely to be adjusted in the cash flow. Because, or in task 3 we might have to show some knowledge of that. That's our subtotal, so should do equal total liabilities is that one plus that one, equity and liabilities can be added up separately, of course. 7372. There we are, matching figures. We've balanced. Just recap. What would be missed out? Well, anything like the accruals missed out, any miscalculation on property, plant and equipment. Unless it was a miscalculation on property, plant and equipment that was in the profit and loss account, it would still balance. And that will pause at that point and worry about the other tasks later.